It's 10:40 a.m. KGGR 106.9 FM. I'm Autumn and so glad to be here with you on this great day. Let's see. And we have Rob Stern here with us with our favorite subject because we all need somewhere to live, right? And not just in an apartment, right, Rob?
Yes, ma'am. No, you're absolutely correct. And it's wonderful to be here after all this cold weather. You know, it's kind of crazy. Boy, it just came out of nowhere, didn't it?
Just showed up.
But that's okay because we're here in the best state in the entire United States. And today's a beautiful day. All the ice and the snow and everything is melting and going away. And we're gonna have green grass here inside of a week, you know?
Yeah. And I'm excited about it. It's so interesting that you say the best state, because I always refer to Texas as the promised land where the jobs are plentiful and then they pay decent enough. And then, you can get, decent living. And I hear that the housing market has gotten better.
Yeah, you're right. The housing market has improved a fair amount. I feel like the past 2 weeks have done quite a bit for interest rates. We've seen rates drop down a tad bit, but more importantly is the availability of homes to purchase. Yeah. I think we had probably 2.5 year spurt of no homes that were available in the marketplace, and that's what was driving the prices up. Of course, everybody kept blaming it on the people moving here from California, which was an easy shot. And I think with that being said, I clearly can't blame anybody for leaving California to come to Texas. Yeah. There's so much more here to offer in Texas. For one, gasoline prices are 50%. So I think that, when you look at everything kind of objectively, we are in a position where now house prices have started to relax a little bit. Now that doesn't mean it's people are panicking and giving away houses at bargain prices. We're still not seeing foreclosure numbers increase. We're still not seeing distress in the market, but we are seeing a lot more seller participation in these transactions. Sellers willing to pay closing costs, willing to help with title. And I'm very happy to say that in the past 6 months, I have not seen one person pay over and above appraised value, which is fantastic because last year this time it was going nuts. We were seeing people pay $40,000-$50,000 over the appraised amount just to buy a house. And that sounds pretty crazy. Now, a lot of those people, to be fair, were coming from out of state where house prices were already out of control, expensive. Mm-hmm. Here we're looking at a housing price of maybe $150 to $200 a square foot. In other markets, Nevada, Arizona, certainly New York and Chicago, Illinois, and Florida. These other markets are already at $300 and $400 a square foot for a house. So these people are selling that house, taking the equity, which is another topic we need to cover, taking that equity and they're bringing it down here, and they don't mind. It wasn't a problem for them to pay $40,000 or $50,000 over the appraised amount. They were still getting a bargain on the house in their mind because of what they had been through. Yeah. That's kind of settled down now. So that's
good. That's good. And you know what? And I too blamed California as well. But what we cannot blame them for is getting our business together, right?
Yes.
Getting our credit, where it needs to be. And getting our money in place that we need. But here's the deal. I always talk about don't self-diagnose. There you go, self-diagnose ourselves. Yes, we need to definitely give you a call. And so what is your number?
Yes, ma'am. My telephone number is going to be 972-739-2350. That's 972-739-2350. And you can also reach me on the internet. Just go to Lenders Texas, spelled out LendersTexas.com, or you can find me on Facebook at the Lenders Residential Mortgage Team. But again, the main thing is just find me. Just start the process towards home ownership. I think that's the one thing that we see repeated over and over and over again. I deal with first-time home buyers, 50 and 60 years old, 70 years old sometimes, even older perhaps, people who are just afraid to take that first step, afraid to take that leap of faith, so to speak, and let us help them become homeowners. And it's not that hard. You just need to have an advocate, somebody to hold your hand through the process.
So, I'm glad you said something about age. How does that work? I'm 80 years old and I want to buy a house.
You look really good for 80, by the way.
Thank you.
So there is no such thing as being too old to become a homeowner.
Okay.
That is illegal. It's called age discrimination.
Okay.
You cannot discriminate against borrowers for several items: race, age, religion, sex, marital status. These are things that are punishable literally by the law. So quite honestly, I had a young lady who was almost 90 years old that purchased a home a year back or so because she wanted to leave a legacy for her grandchildren. Okay. She wanted to purchase a home that she could live in through the rest of her life, but she wanted to have a home for her daughter, who is a single mother, and her grandchildren. Not only
are the loans different? Because if you think about it, I'm trying to get a 30-year mortgage or a 15-year mortgage.
No, ma'am. No, I cannot force you to do a 30-year or a 15-year or a 20-year mortgage. You have the right as a consumer, regardless of your age, to take a 30-year mortgage. So that's a good question, though quite literally, that's the same question I was asked by this borrower when she purchased a house at 90 years old. She said, "Can I do a 30-year mortgage?" And of course, she could. I mean, I can't stop her from doing a 30-year mortgage.
Right.
The reality is, chances are she wouldn't pay that mortgage off if her goal was to go to the end of life on the mortgage, the 30 years. But clearly, people sell homes, as we know now. People can sell homes within a 2-year period or a 3-year period. So the amortization really has absolutely nothing to do with the age. And again, that's called age discrimination, regardless. Now, something else, of note to mention here, and that is that they are talking about coming out with a 40-year mortgage, so that payments will be lower because FHA, Fannie Mae, Freddie Mac, USDA, everybody wants to make home ownership more affordable. Well, the reality is that the prices aren't. Excuse me. The reality is that the prices aren't going down. Yeah. Therefore, by increasing the term of the mortgage loan, that will make your payments go down significantly.
Now, you said they are talking about it. Who are these people? And how am I getting a phone call to
Pardon me.
People?
That's going to be Fannie Mae, Freddie Mac. And these are not people, by the way. These are huge companies. Mm-hmm. Fannie Mae, Freddie Mac, FHA, VA, USDA. All of the GSEs, all of the large entities are speaking about how to make home ownership more affordable. And quite honestly, I see that a 40-year mortgage is in our future. I'm pretty confident.
So how possible is it for that?
Right now, not very. Right now, there are no 40-year mortgages, but within the foreseeable future, I think it could happen. Quite literally, I feel like within a matter of years, perhaps. If you look at what's happened to interest rates, which have doubled quite literally in the past year, if you look at interest rates and where they are and where they're going, Federal Reserve just raised interest rates 25 basis points yesterday, with the indication that more may be coming. If you look at what's happening to interest rates, it's almost an absolute guarantee that they're going to have to do something to make home ownership more affordable. When you can't buy a home for, $1,500, $1,800 a month, you have to spend $2,500, $3,000 to buy a home. That puts a lot of people out of the market. And again, Autumn, this is really interesting, but who is the largest mortgage holder in the United States? It's the U.S. government. It's us. Mm-hmm. We own all those mortgages, right? Mm-hmm. So if people stop buying houses, that hurts us.
Right. Yeah.
The government's responsibility is to keep home ownership moving forward, to continue to perpetuate the transaction.
Mhm,
And there's only a couple of ways that can happen, either with lower interest rates,
mhm.
which is what we've been through for the past 3.5 years,
Yeah.
either with lower interest rates or with a longer amortization term for these mortgages. I don't think we're ever going to see interest rates down at 3% again.
Oh,
Good, it's possible, but I would say it's highly unlikely because the premise behind those low interest rates had to do with the mortgage-backed securities that we were buying as an American public. We weren't selling our mortgage-backed securities on the open market as we would traditionally do to third-party countries rather, excuse me, whether it was China or Japan or whomever. We were buying our own mortgage-backed securities, which was suppressing the interest rate. We were buying those securities because we were the only ones that would buy them at those low interest rates.
mhm.
So now that all of that easing, which was called quantitative easing, now that all the easing has stopped and they've put these other mechanics into place,
Mhm.
interest rates are going up significantly.
Yeah.
I really see the only answer is to go to a 40-year mortgage.
Yeah. And that would definitely help. So let's go ahead and pause again for you to go ahead and give your information, because I typed in your name on Google. So if you look up Rob Stern, and it leads right to you. So you're Googleable.
Here I am. I'm here. Yes, ma'am. My contact information at 972-739-2350. That's 972-739-2350. You can also find me on the internet. Just go to Lenders Texas, spelled out LendersTexas.com. Find me on Facebook rather as the Lenders Residential Mortgage Team.
And if you just forget all of that, you can definitely go to Google and type in Rob Stern. You can put mortgage or lenders. It leads you all right to his business. So make sure that you guys definitely get a chance to do that. So Rob, speak about, because I get questions on student loans, and a lot of people owe, 50,000 plus on student loans. So how does that help or hinder us from buying a house?
I've seen people that are $150,000, $200,000 in debt for student loans. And I acknowledge that there was an education that came along with that debt. A lender is going to look very specifically at student loans and the way that they've been paid. If the student loans are in deferment, then depending on how we're financing the transaction, that amount will typically be counted at 0.5%. So in other words, $100,000 in student loans would be counted at $500 a month in debt that goes into the debt ratio.
Okay.
I typically don't see big problems with student loans when they're not delinquent. Where the rub comes is when these student loans are delinquent. And I want to be really clear about this to everybody that's watching and listening. You will not be able to get a government-backed mortgage if you're delinquent on your student loans. Now, I don't mean if you're 30 days behind. I mean if you have just stopped paying them and let them go into default. The government has the ultimate trump card. There's no other word for it, right?
Yeah.
The government can put the kibosh on any mortgage loan if you don't pay those student loans as agreed. There are all sorts of programs out there for student loans to take them out of default. I spoke to a young lady the other day, and she went into a workout program where she's paying $5 a month on $85,000 worth of student loans to get them out of default.
Yeah.
So it's not like the government wants to hurt anybody. They just want the benefit of their bargain. They want to know that there is some payment activity going on and that payment's being met. As a lender, what we're going to look for is the resolution of the student loans. We'll need to see a 3-year payment history and a copy of that resolution agreement. That's it. So if you're paying $5 a month, that's great. Do it for 3 months. Give me a payment history and a copy of the repayment agreement, and we're good.
So it's not necessarily about the money. It's really about the character of the credit, right?
Yes, ma'am. It's about the credit worthiness of the consumer.
Mhm.
And that's the same thing with every mortgage loan. When it comes to a veteran, we look at we don't look at the veteran's credit score. We look at their credit worthiness, meaning how they've handled their credit over the past 12 months. If the veteran has paid their debts as agreed, no charge-offs, no collections, no late payments in the past 12 months, then we're in a good place. And we can do something for them. I don't care if their credit score's a 400. I can still do that mortgage loan because I'm a direct VA portal lender, meaning I go directly to the Veterans Administration without any overlays that are unnecessary to prevent anybody from qualifying.
So for those who may have collections on their credit, is it wise to go ahead and just pay it off if you can?
No. The smart thing to do, the smart thing to do is to communicate with a lender before you do too much. Now, I would say stay away from the credit repair companies who make their living off of that, because they're not mortgage lenders and they don't know what they're doing. So while they might be able to give you tactical advice on how to improve things, that's not necessarily accurate information as far as how to get a mortgage. Communicate with a lender, me, and allow me to help you through the credit process. I don't charge to do credit restoration or credit repair because I don't do credit restoration or credit repair. What I do is I consult with an individual to help them get themselves credit ready to purchase a home. So, there's no reason to let credit difficulties, credit challenges get in the way of your quest towards home ownership. If you want to own a home, you can own a home. Now, something else of note here, and I think people should understand this about collections. On a credit report, there's always going to be a column that's identified as date of last activity.
Okay.
Date of last activity, if that debt charged off 2 years ago, your date of last activity would typically be, in this case, February 3rd of 2001. If you call them up on the phone, pardon me, I think we both have
I know that thing.
If you call that creditor up on the phone and you settle that debt, unless you're very explicit about how you're doing it, it's going to move that date of last activity up to February 3rd of 2023.
Because you've had contact with them.
Because you've had contact with them and there was activity on that account. So you need to be very careful how you do these things. Credit that's one of the reasons why credit repair can be so damaging.
Yeah.
If you're going to pay off a charge off or a collection, which I would never tell anybody that that's the wrong thing.
Right.
But if you're going to pay a charge off or a collection, you want to make sure that you communicate with the people you're negotiating through and tell them that your goal is to have that debt removed from your credit report. You don't want it re-reported as date of last activity. And depending on their answer and what they're willing to commit to, then you can choose how to move forward and whether you want to eliminate that debt or not. Remember, when you speak to somebody on the phone, that's all you're doing. You are a faceless individual speaking to a faceless individual on the other end of that line. You can say or negotiate anything you want, but when they negotiate with you, you want to make sure that it's not going to give you a current date of last activity. That can be literally a deal breaker when it comes to a.
But even if you don't talk with them, I heard that the fact that you answered the phone gives a date of last activity. Yeah.
I mean, if you get into a conversation and literally make a payment, that's going to count as activity. But again, remember, we don't control how these people report to the credit bureaus, and that's what's really the biggest problem that we're dealing with right now as an industry. We have these companies out there, third-party companies. Now, of course, your your large companies, Capital One and Credit One, and whatever else, all the Chase Bank, all these large entities, they report in an accurate fashion. They're held to a very specific standard. But when you start dealing with these collection companies who literally buy debt from a third party, they can say and do whatever they want on your credit report.
Wow.
And you can't really control that. Now, there's something called the FCRA, the Fair Credit Reporting Act, but that means that as a consumer, you have to take action and combat what they've done to you. So it's very perilous to let something get to that extent. And I think that when it really comes to play, something else that I would like to let people know is that, when you have medical collections on your credit, you don't need to worry about that impacting your credit score directly, because medical collections are not considered in what makes your credit score right now. Medical collections are quite literally something that is pulled out of the credit scoring model. They're going to show up on your report, but it shouldn't hurt your credit score. So if you've got medical collections, that's the last thing that I'd tell you to turn around.
It's not pulling on your score.
No, ma'am. No, ma'am.
Okay. Well, I mean, I see that you're obviously very knowledgeable about this, and I know you've been doing it for a very long time. But I think it's just wise that for us not to sift through figuring it out ourselves, but definitely to give you a call. But it's good to know that you have this information that's available. What's your phone number again? Yes,
ma'am. My telephone number, 972-739-2350. That is 972-739-2350. And you can also find me on the internet. Just go to Lenders Texas, that is LendersTexas.com, and do not self-diagnose. That's your term.
Yes. Do
not self-diagnose. Give me an opportunity to help you become a homeowner.
Yeah, you definitely want to talk to the expert. I try to self-diagnose my car all the time rather than taking it to the expert to do that. So I try not to self-diagnose. You want to go to the doctor when something is wrong. So now, does it work? Does the credit work the same for someone who's trying to refinance?
Yes, ma'am. Refinancing is a similar type of situation, with one big caveat. If you are in an FHA loan or a VA loan, you can streamline that refinance. I'm not going to look at your credit, and I'm not going to look at your income. I can streamline that loan without a problem. I am going to look at your mortgage history,
okay,
and that's what's going to carry the transaction. But yeah, refinancing is a pretty simple process, and right now we're actually seeing a lot of people that are choosing to refinance for the purpose of taking equity out of their house, using that equity that has been built up over the years to eliminate credit card debt, eliminate other debts that have been incurred with this crazy economy that we're all having to live through right now.
So what is it that you need to find that's a good report in our mortgage history? Because I feel like, a lot of people sometimes get behind. We have a certain amount of time, like, okay, we were only behind twice, or, what are the requirements?
Well, there is not a definitive answer. Clearly, if you pay your bills as agreed, your credit should be acceptable. Mm-hmm. Now, with that being said, let's talk for a moment about what goes into a credit score. Credit scores are based on the amount of debt you carry on your different credit cards. So as an example, you're better off having a credit card with a $500 limit and owing $50 than you are having a credit card with a $50,000 limit, but owing $40,000. Mm. In other words, it doesn't matter how much of a limit you have on the credit card, it's how leveraged you are against that debt.
Okay. So reality, limit $1,000, owe $300.
Yeah, reality, you should not owe more than 30% of the available credit limit.
Okay.
Had a situation just yesterday with a young lady whose loan collapsed on her because she went and jacked up a credit card over the limit. We're having to go through a rescore and get the whole thing put together. She had to pay the credit card off. People don't necessarily realize the impact, regardless of whether we and how often we tell them, don't put any big charges on your credit card, don't go out and make any major purchases.
And you're talking about during this time of the home buying process.
During the home buy, yes, ma'am. During the home buying process, you want to keep your purchases to a minimum. If you have cash, live off the cash. Don't live off the credit cards. Again, every lender is going to pull something called a final credit report. Now, that doesn't mean I'm going to pull a final credit report to see where your credit scores have gone. Your credit scores are locked in with me because I'm a direct lender. You're locked in with me for 120 days. From the day I pull the report for 120 days, your credit score is in. It's done.
Wow.
But what I am going to do is I'm going to look at your debt to make sure that there's no undisclosed debt that's been taken. In other words, if you've paid down your credit cards, I'm cool. But if you've taken that credit card and jacked it up over the limit, that could be a problem. And at that point, I need to address it. So it's called undisclosed debt monitoring. Every mortgage lender is going to do this. And remember, I'm the actual lender. I'm the banker. I don't sell my paper to a third party. I'm not a broker. So what I do is exactly what every other lender is going to do. I'm going to make sure that there is no debt that's been undisclosed, so that when we do close that loan, we know exactly where we are and what we're doing.
Wow, that's good, Rob Stern. Okay, so give us your information again in case you guys need to write it down this time.
Yep. My telephone number one more time is 972-739-2350. That is 972-739-2350. And you can find me at Lenders Texas, spelled out LendersTexas.com.
Wow, this is so amazing. So you're a one-stop shop, and there you have it. He's not the middleman, guys. He's the man. All right. So you definitely want to make sure that you give him a call. And Rob, talk about the specifics to helping out our veterans.
Yes, ma'am. So a veteran has some very specific entitlements that are not afforded to anybody else. On a VA mortgage loan, first off, there is no mortgage insurance every month, ever. Never, ever any mortgage insurance. Secondly, on a VA mortgage loan, there is never a down payment. I don't care if your credit score is a 400 or an 800, you're not going to ever have a down payment.
So who takes care of that?
That is taken care of by the United States. That's part of the Veterans Administration.
Okay.
Part of the responsibility of the VA. Never a down payment. Even better, on a VA mortgage loan, your debt ratios that are allowed are 30% higher than any other type of a mortgage loan. Wow. So on a traditional mortgage loan, the debt ratio limitation is 50%. On a VA mortgage loan, the debt limitation is 65%. So if you look at all that in totality, a veteran can buy more of a house for less money with no down payment. And you know what? Veterans deserve that type of opportunity.
Oh, yeah.
Veterans deserve every bit of courtesy that we can give to them as consumers, as individuals, as humans. These are people who are willing to literally lay down their life for you and I, and they don't even know us. I have so much respect for veterans. My father was a veteran. Veterans throughout my entire family. I just think that that is the ultimate call to duty, and I respect that so much.
Can they co-sign and get the same benefits?
No. No. A VA mortgage loan is meant for the veteran and their spouse, or perhaps their widow, depending on what the case may be, or widower, I guess I should say. We've got a lot of female veterans too. Yeah. So the veteran cannot put his daughter or niece or aunt or whatever into a mortgage loan. That mortgage loan and those courtesies are reserved specifically for the veteran. There are other no down payment programs available that are not quite as liberal as a VA mortgage loan. The USDA loan is a no down payment loan as well, but it's much more restrictive as to the type of credit and the debt to income ratios that are allowed. There's also a monthly mortgage insurance on a USDA loan. So there's so many great loan products out there. Like I said, the main thing is, if you don't want to be in a rent house or a rent apartment or wherever duplex, if it's time to contemplate the benefits of home ownership, now is the right time to give me a call. We are in a situation where interest rates have started to relax a little bit. Home prices have relaxed a little bit. And we know that apartment rents are higher than they've ever been.
Yeah.
So this is the right time to take advantage of the opportunity and get the process started.
They're higher than a lot of mortgages. So
yes, ma'am.
Definitely home buying is the place to be right now while the market is kind of okay and all of that. So Rob, we've got about a minute here. Go ahead and give them your information.
Thank you. Yes, ma'am. My information one more time. My name is Rob Stern, last name spelled S-T-E-R-N. I'm with the Lenders Residential Mortgage Team at Mortgage Solutions. You can reach me at 972-739-2350. That's 972-739-2350. You can find me on the internet. Just go to lenderstexas.com, spelled out LENDERSTEXAS.com. Find me on Facebook as the Lenders Residential Mortgage Team.
All right. Thanks, Rob Stern. And if you get confused, guys, you can go ahead and go to Google and Google him. He's there. And then you can also call the station as well. We can forward that information on to you. So we thank you so very much. I always tell people to make sure you get your questions together so that next Friday when we're live on the air as well, that you can call in and ask him here, because you never know when you may be asking for someone else as well.
Yes, ma'am. So you're absolutely correct. That's
all
great
right.
suggestion. Thank you, Autumn.
We thank you, and you have a great weekend.
Yes, ma'am. Bye-bye.